Hello everybody, doing here from DRFX, Forex and Trading. We're going to be taking a look at the New Zealand Japanese yen, which is providing us with a strong trading opportunity today as we attempt to take advantage of the strong breakout that is taking place on the daily chart. Now, as you can see from the graph here of the daily chart, what is actually happening is that the market is breaking out of this very large consolidation setup with a breakout taking place above the resistance boundary. You'll notice that the breakout has essentially just started. So there's a lot left in terms of trading opportunities and profitability as the market is expected to continue this bullish movement over the medium to long term. So over the next couple of weeks and months, we should see a lot of gains in favor of the New Zealand dollar, which should provide us with a strong trading opportunity to capture a strong gain of 200 pips. So 200 pips is what we're going to be aiming for. And over the course of the breakout that takes place in the next couple of weeks and months, we're going to be trading additional opportunities based on what the market is going to be providing for us. So this is a trade that we're going to be looking at now, and we're going to be taking a look now at the actual signal on the daily chart and the setup on the 4-hour chart that will allow us to take advantage of this movement. Now this is the actual signal on the daily chart that is now giving us the green light to start trading long. You can see that this has come following the strong U-turn that has taken place here to indicate the resumption of the movement bullish and the breakout from the consolidation itself. So given that this is a strong signal here on the daily chart, the next step is to look on the 4-hour chart to identify if there's any strong area, if there's a strong enough setup on that time frame that will allow us to take advantage of this signal with a strong stop loss. As you can see here, the 4-hour chart has actually provided us with a strong enough setup, taking the form of this pennant setup here, which should be able to allow us to protect our trade until our target is hit. So what we're going to be doing is placing our stop loss below the support boundary here, which is also going to be coinciding with this inner uptrend line on the 4-hour chart, which will also act as a strong support area to protect our stop loss. And we're going to be keeping the stop loss at this area here until our target is hit. So the ideal place to place our stop loss is going to be at 77.10, and based on the rules of our trading methodology, we're going to be using a maximum stop loss of 120 pips. So our entry price has to be at 78.30 or lower in order to comply with this stop loss maximum requirement that we have. Going to be targeting a trading gain of 200 pips from entry, and this should take us towards the 80.30 level. So over the course of the next several days, we're going to be hoping for the market to rally and provide us with this strong trading gain of 200 pips. Now, in terms of the holding period, based on the fact that we're actually breaking out of such a large consolidation and that we're going to be targeting a trading gain of 200 pips, the maximum holding period is going to be set at 7 days. So we're expecting that within that time frame, the market should be able to hit our trading target, and as it moves fairly aggressively over the next couple of days. Since we're breaking out of a consolidation, both on the daily chart as well as on the 4-hour chart that you can see here, the movement should be fast enough to be able to provide us with that 200 pip gain within that 7-day holding period. So what this means is that this trade is going to require us to be a lot more patient than is required of us for shorter trades. So we're going to have to be very disciplined in keeping the trade open and only looking at it when the market has either stopped us out or has actually hit our trading target. So this is the trade setup in a nutshell. We're going to be taking advantage of what is expected to be a very large breakout from this large consolidation set up on the daily chart. This should provide significant gains for the New Zealand dollar over the medium to long term, and we're now going to be taking advantage of the first opportunity provided to capture 200 pips as part of this breakout. We're going to have to be very patient because this trade will require a maximum holding period of 7 days. And of course, we're going to have to be disciplined to not look on the chart nor look on the floating profit throughout the next couple of days. So we're going to be sending you this video and the information related to this trade setup. And when it comes closer to the time to enter the market, I'm going to let you know and give you confirmation that I have actually executed the trade and that you should do the same. If there's any unexpected change in the market, which you know sometimes happens, then I'll let you know as well. But based on what I'm seeing so far on the daily chart and the 4-hour chart, we should be able to execute this trade with a lot of confidence that we will be able to capture this strong trading gain over the next couple of days.